not about picking stocks. It's about picking the right portfolio.
Oil. We got an interesting catalyst this weekend. OPEC Plus meeting.
Ooh.
And I'm guessing there's going to be some pin action around this, but we've talked about this a fair amount in the past. When they usually do deeper production cuts, it's actually a fairly negative sign for demand, and you could see a pop.
That's interesting.
But usually, you have the kind of follow through, which is a realization that demand's very weak out there. So I don't know if part of what's happening with the signal is sort of reading through what OPEC Plus might be talking about or looking at. Yesterday was funny. Oil was up on that. Today I think it's down on that. So people have sort of no clue.
Well, the best way to have a clue is just to use the math, right? Like, so if you take oil, and this is, again, it's a far better way, obviously gambling example versus full investing cycle set aside. On the very immediate term, if you were taking a shorter term view, just trading oil, like what would you look at? 1, 2, 3. 1, what is the trend? Okay? Trend. 1. In this case, and by the way, unless I give it to you, you would know that the trend for oil is 81.85. Okay, so that's 1. 2, where is the risk range? Let's call it 73 to 80. 3, where is last price? Okay. Where is it, Jonesy? 77?
Yep, right around there.
Okay, so therefore, the immediate term upside on that kind of an option, which you said the street was trying to play yesterday, again, that's just the narrative looking backwards at an up price. Today, the narrative is going to be ceasefire equals down. It's never just one thing. If you're still thinking it's just one thing, it's because you need to believe it's just one thing. If you're telling me how global oil and global demand into a recession trades just being a one thing on an OPEC meeting or a ceasefire, you've lost your marbles, okay? Or I'm going to tell you did. Right? Now, in this case, we'd say, okay, let's just say that it goes from here to here. That's what, plus 4%, something like that?
Yep.
So, okay, upside in oil is 4%. But what you really need it to be up is to be from 77 to, let's call it 82, which is to be up 6.5%. You need to change the trend on oil, you have to have a 6.5% move. So when I think about my book, that's all I really think about. Where's the trend? Where's the range? Where's the last price? Okay? I don't really think, as you know, about like what. I'll listen to what you just said on OPEC. I'll listen to what JT said this morning on the ceasefire. The risk, by the way, of a non-ceasefire 3 to 5 days from now. What happens after that? What I'll always do is go back to this. I've tried to skin this cat fundamentally on what and why, so many different ways that I've obviously gone all the way back down to what and why. I've gone to when. When. When it's bearish trend, when it's at the top or low end of the range, from the last price, that's when I act.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.